Patience. It sounds simple, almost cliche, but in both life and trading, it is the most undervalued skill a person can cultivate. It's easy to underestimate how much our daily habits, our routines, and the way we respond to small frustrations shape our performance on the charts. Most traders think the battle is with the market, predicting trends, catching moves, finding setups, but the truth is far more uncomfortable. The market is rarely your enemy. Your impulses are. Your inability to wait, to observe, to tolerate uncertainty, that is what erodes accounts, confidence, and clarity. Consider this: when you were a child, waiting for your birthday, Christmas, or a special reward seemed unbearable. The minutes stretched into hours, the hours into days, and yet eventually, you learned how to wait. That early lesson, often unnoticed, is directly connected to how you behave in trading. Because trading, much like life, is fundamentally about delayed gratification. You plant the seed by placing your trade according to your plan. You nurture it by managing risk and monitoring without interference. And then you wait. Let's frame it another way. Imagine you're standing at a train station. The train isn't on time. You've been waiting for 15 minutes. Your mind starts to fidget, checking the time, pacing, imagining every possible scenario. Now imagine that same impatience at the trading desk. A setup meets your criteria, but the price hasn't quite hit your entry. You ignore your rules, pull the trigger too early, and the trade reverses. The parallel is clear. Impatience in life translates directly into impatience in trading. Every small act of self-control outside the market strengthens your ability to wait for the right moment inside it. Patience is not passive. This is a critical distinction most traders miss. To be patient doesn't mean doing nothing. It means active awareness, careful observation, and disciplined restraint. In life, this could be sitting through a tense family discussion without snapping, allowing someone to explain their perspective fully before reacting. In trading, it's observing price action, confirming your edge, and letting the trade come to you rather than forcing your will on the market. Both require practice, both require self-awareness, and both are easier said than done. Think of patience as a muscle. Like any muscle, it strengthens with repeated, deliberate use. Start with small exercises. In your day-to-day life, notice every time you want to rush or react. Waiting in traffic, standing in line, receiving criticism, dealing with an unresponsive coworker, these moments are training opportunities. Each time you pause, breathe, and respond intentionally, you're building the same mental strength that allows you to execute your trading plan flawlessly, even under pressure. Here's a concrete example. Imagine a parent helping a young child with homework. The child struggles with the problem. Your instinct might be to jump in, correct, or complete it for them. But by stepping back, guiding gently, and allowing the child to find the answer, you're practicing patience. That patience translates directly to the charts. When a price consolidates, when volatility is low, when trades aren't presenting themselves clearly, your mind has been trained to sit, observe, and wait rather than forcing a premature trade out of frustration. Patience also intersects deeply with emotional regulation. The impatient mind reacts. It fears loss, desires gain, and struggles with uncertainty. The patient mind observes. It recognizes impulses, labels them, and acts from a position of clarity rather than reaction. Neuroscience shows that the prefrontal cortex, the part of your brain responsible for decision-making, functions best when you are calm, deliberate, and aware. Impatience triggers the amygdala, the fight or flight center, which leads to snap decisions, missed stops, and emotional overtrading. Life teaches you how to manage these impulses before you even sit in front of a chart. Another way to understand this is through the lens of long-term life goals. Think about the effort required to complete a professional certification, train for a marathon, or save for a down payment. These endeavors cannot be rushed. They require consistent action over time, acceptance of delayed results, and the ability to navigate setbacks without losing motivation. Trading is no different. The market doesn't care about your schedule or your emotions. The only thing that matters is that you follow your edge consistently, over time, and without interference. The garden metaphor is particularly apt here. When you plant a seed, watering it daily is necessary, but digging it up constantly to see if it has sprouted will only hinder growth. Trading is identical. You research, plan, and execute trades according to your strategy. Then you watch. You monitor. You manage risk. You allow the market to do its work. Impatience, in this analogy, is the shovel, constantly disturbing the soil and weakening the root of your account's growth. Finally, reflection solidifies patience. Journaling daily interactions, emotional reactions, and moments of frustration helps you identify patterns. Perhaps you find that you overreact when deadlines are tight or become anxious when your child resists guidance. Recognizing these tendencies is the first step toward controlling them at the trading desk. You start to notice your triggers, anticipate emotional reactions, and create mechanisms to respond deliberately rather than impulsively. In essence, patience is a bridge. It connects everyday life to trading excellence. Each moment you choose to wait, observe, and act intentionally builds the neural pathways that allow you to do the same under pressure with real capital at risk. Every parent who calmly guides, every student who perseveres, every worker who endures delays is unknowingly training to become a better trader. And when you finally bring that discipline to your charts, the market reacts not to your impatience, but to your skill, your patience, and your timing. By seeing life as a training ground for patience, you can stop viewing trades as tests of luck or indicators as oracles. You begin to understand that the real test is internal. Can you sit, breathe, and let your plan unfold? Can you tolerate uncertainty without acting rashly? Can you transform frustration into observation? These are not abstract questions, they are the foundation of all consistent trading success. Patience in life does more than just prevent mistakes, it builds perspective. In trading, perspective is your invisible edge. When you step away from an impulsive trade and wait for clarity, you're practicing the same patience that allows you to see situations in life with calm judgment. Think about those moments when a loved one is upset, and your first instinct is to react defensively. Instead, you pause, listen, and respond thoughtfully. That pause, the space between impulse and action, is identical to the pause you must take before entering a trade that only partially meets your criteria. It's worth exploring why this pause is so hard. Human beings are wired for immediate feedback. Evolution has trained our brains to respond quickly to danger, to seize opportunities, and to avoid losses. But the modern world, and the market, often require the opposite: delayed action, measured response, and calculated risk. This is where life training becomes invaluable. Every time you endure a long meeting, a slow customer service call, or a child's tantrum without reacting, your brain reinforces the pathways that allow you to tolerate market uncertainty. You are literally exercising your patience muscle. Consider the difference between two traders with identical strategies. Trader 1 reacts to every small fluctuation, entering trades without confirmation and exiting with every tick. Trader 2 takes the same strategy but exercises restraint, waiting for the setups to fully mature. Over time, Trader 2 consistently outperforms. The skill that makes Trader 2 successful isn't the indicators on the chart, it's the life-honed ability to wait, to tolerate discomfort, and to act only when conditions are optimal. This is the often overlooked bridge between everyday life and professional trading. Let's apply this to back-to-school season, a period many traders experience as chaotic. Parents juggle schedules, homework, early mornings, and endless checklists. The stress of trying to maintain equilibrium can easily spill over into trading decisions. A rushed mind looks for quick wins, chases setups that don't meet criteria, and overreacts to small losses. However, those who learn to balance responsibilities with patience, who cultivate routines that allow space for observation, bring the same clarity to their charts as they do to their homes. They learn that structure, planning, and deliberate pacing create both calm and opportunity. One practical exercise is what I call the observation window. When life gets hectic, dedicate a small period each day, 5 or 10 minutes, to simply notice. Notice your reactions, your impatience, and your tendencies to control outcomes. Maybe your child refuses to finish a task. Maybe the school morning routine is running late. Instead of reacting, note what you feel. Label it: frustration, urgency, fear of being late. Then release it. This mirrors what disciplined traders do with charts. Observe the market's signals, note the emotional response they trigger, then return to the plan without acting impulsively. Over time, these small moments of awareness compound, just like interest in an account, strengthening your ability to remain patient under pressure. Trading also teaches lessons about accepting uncertainty that life alone cannot. Life presents scenarios where outcomes are unknown, relationships evolve, jobs change, children grow, but we often react as if we can control everything. In trading, the market's uncertainty is blatant and immediate. Prices move without reason, setups fail despite logic, and external events disrupt trends. Learning to tolerate this uncertainty, to step back and act deliberately rather than reactively, is a skill that crosses both domains. Patience in life helps you develop this tolerance, and trading hones it further. An essential part of this journey is understanding the difference between waiting and stagnation. Waiting is active, it involves monitoring, observing, preparing, and being ready. Stagnation is passive, it is inaction fueled by fear, indecision, or avoidance. The best traders are masters of active waiting. They understand that every moment spent waiting in accordance with their plan is a moment invested in better decision making. In life, the same principle applies. Choosing not to react to a minor conflict, resisting the urge to check your phone compulsively, or holding back from impulsive purchases, all of these strengthen the neural pathways that help you respond with clarity under trading pressure. We also cannot ignore the role of emotional endurance. Life will test you with frustration, unexpected changes, and moments where patience feels impossible. Trading mirrors these trials in concentrated form. A trade can go against you for hours or days, testing every ounce of discipline and patience you've developed. Those who have trained themselves to tolerate frustration in everyday life through relationships, parenting, work, or personal challenges find that they are remarkably equipped to handle market pressure. This is not theory, it is practice translating seamlessly from one domain to another. Let's explore a story to illustrate this. Imagine a trader, Alex, who is also a parent. Alex's mornings are chaotic: breakfast spills, forgotten homework, and last-minute rushes to the school bus. At first, Alex notices this stress creeping into trading decisions, entering trades too early, sizing positions incorrectly, or abandoning plans at the first sign of resistance. But Alex begins to apply lessons from life. During these morning challenges, Alex practices calm observation, recognizes emotional triggers, and reminds themselves that patience yields better results. This small mental discipline carries into trading. When a trade setup aligns perfectly, Alex enters with confidence, manages risk correctly, and holds positions with calm, regardless of market noise. Over months, the impact is visible not just financially, but psychologically. Patience cultivated in life reinforces trading success. Another layer to consider is the relationship between patience and adaptability. Life rarely goes exactly as planned, and neither does the market. Patience does not mean rigidity, it means the ability to adapt without losing composure. A patient trader, like a patient parent or professional navigating life's unpredictabilities, can shift strategies when conditions change but does so without panic. This fluid patience is what separates reactive traders from disciplined ones. Finally, reflection ties all of these lessons together. Journaling is not just for trades, it can be applied to life experiences as well. Note moments of impatience, frustration, or impulsive reaction. Then track how you responded. Over time, patterns emerge. You begin to see correlations between life stress and trading behavior, between emotional triggers and market reactions. This awareness allows you to intervene before mistakes happen, creating a feedback loop where patience in life directly enhances trading performance. Patience is not a trait reserved for the naturally calm or born disciplined. It is a skill, a habit, and a mindset. By cultivating patience in life through relationships, responsibilities, and daily challenges, you are actively training the most powerful tool a trader can have: the ability to act with clarity, timing, and confidence. Every skipped impulse, every delayed reaction, every intentional pause builds the infrastructure for consistent trading success. And the beauty is, it works both ways. Trading can also reinforce life patience, creating a virtuous cycle of discipline, awareness, and composure that extends far beyond the charts. As we continue exploring patience, it's important to consider its relationship with risk management. Patience isn't just waiting, it's the discipline to act only when the risk reward is in your favor, even if it means sitting on the sidelines for hours or days. In life, you encounter similar moments. Maybe it's deciding whether to invest time in a relationship, a job opportunity, or a personal project. The same principle applies: waiting for the right conditions, gathering information, and only committing when the odds favor success. Many traders confuse patience with avoidance. They think that staying out of the market or hesitating means they're patient. In reality, patience requires active engagement. It means monitoring the market, understanding the dynamics, and being mentally ready to act when the optimal moment arrives. In life, patience works the same way. It's not about doing nothing, it's about preparation, observation, and timing. A parent waiting for a child to calm down isn't ignoring the situation, they're observing, preparing, and planning their response. A disciplined trader waiting for the setup isn't idle, they're reanalyzing, assessing, and positioning for a higher probability outcome. Consider the role of delayed gratification, one of the most powerful aspects of patience. Delayed gratification isn't just about resisting impulses, it's about valuing long-term outcomes over short-term satisfaction. In trading, this might mean sitting through consolidation, ignoring a minor breakout that doesn't meet criteria, or resisting the urge to overtrade after a loss. In life, it might mean investing hours into studying or skill development rather than seeking instant entertainment. Every time you practice delayed gratification, you strengthen your ability to resist impulsive trades and make decisions aligned with your plan. It's also crucial to recognize that patience intersects with emotional regulation. Markets are inherently unpredictable. Even the best setups can fail. Emotional turbulence is inevitable. Without patience, fear and frustration dictate action. With patience, emotions are observed and managed. Imagine a parent dealing with a toddler throwing a tantrum in public. The instinct may be to yell or react defensively. The patient parent observes, breathes, and responds deliberately, maintaining composure. The same scenario plays out in trading. A sudden spike against your position triggers anxiety, but patience allows you to assess whether the move aligns with your analysis or if it's noise. The stories of my own trading illustrate this vividly. Early in my career, I would often react to every minor fluctuation. A small pullback would trigger panic, a brief rally would spark greed. My account bounced up and down like a roller coaster. Over time, I noticed that the traders who consistently succeeded weren't the ones with superior strategies, they were the ones with patience, emotional resilience, and the ability to wait for clarity. I began applying lessons from life, breathing exercises, journaling emotional responses, and observing my impulses without judgment. Gradually, this cultivated the patience to let trades mature, cut losers efficiently, and hold winners with confidence. Let's explore a concrete practice, the trade pause exercise. Before entering any position, take a moment to stop and breathe. Ask yourself, does this trade meet all my criteria? Am I reacting to fear or greed? Am I prepared for potential loss? In life, this is identical to pausing before reacting in emotionally charged situations. That tiny moment of reflection dramatically reduces impulsive mistakes. Over weeks, this builds neural pathways that reinforce disciplined, patient behavior both in trading and daily life. Another dimension of patience is resilience. Life throws curveballs, unanticipated events that test your composure. The market does the same. A trade that initially looks perfect may turn volatile. Economic news can spike prices unexpectedly. The patient trader understands that volatility is part of the process. They don't panic, they don't double down irrationally, they observe, reassess, and act according to their plan. This resilience isn't innate, it's built through repeated exposure to life's challenges, coupled with mindful reflection and practice. One of the most powerful lessons I've learned is that patience fosters clarity. When you're patient, your mind is less clouded by emotion. Decisions become more deliberate. Trades are no longer reactions, they're calculated, informed actions. Similarly, in life, patience allows you to think clearly under stress, make better choices in relationships, career decisions, and personal growth. Clarity emerges when you've trained yourself to pause, observe, and respond rather than react. It's also worth noting the compounding effect of patience. Just as small trades compound into account growth, small moments of patience compound into significant improvements in behavior, mindset, and results. Holding back on a marginal trade today may save your account from a loss, just as waiting for the right opportunity in life may lead to better relationships, career moves, or personal achievements. Each small act of patience is a seed, and over time, the harvest is consistency, composure, and success. Let's consider an example from my trading journal. I remember a setup where all indicators aligned perfectly, but I noticed a subtle divergence in volume that gave me pause. My initial instinct was to enter immediately, but I waited an additional 2 hours for confirmation. During that period, the market initially spiked against me but then aligned perfectly with my strategy, resulting in a profitable trade. That small act of patience, cultivated from years of life experiences and observation, turned a potential loss into a gain. It's a lesson that no indicator or system alone could teach. Finally, patience in life and trading is inseparable from self-trust. When you cultivate patience, you build confidence in your ability to wait, observe, and act without impulsivity. You develop trust in yourself, in your process, and in your strategy. This self-trust is the backbone of long-term success. Traders who lack patience often second-guess themselves, overtrade, or abandon strategies at the first sign of adversity. Those who embrace patience consistently outperform because they trust the process, manage risk effectively, and execute with clarity. At this stage, you might start noticing patterns in your own behavior, both in life and in trading. These patterns aren't just coincidences, they reveal how your mind reacts to stress, impatience, and uncertainty. The choices you make outside the market, how you handle deadlines, interruptions, or family demands mirror the decisions you make in the heat of a trade. Recognizing these connections gives you a lens to observe yourself in real time. You can start identifying moments when impatience creeps in, when frustration clouds judgment, or when fear of missing out nudges you toward impulsive actions. By keeping your awareness active, you begin to see that patience isn't just a virtue in life, it's a practice, a skill you can develop, refine, and carry straight into your trading. Deepening into the connection between life and trading, it becomes clear that patience is more than just waiting, it's about intentional timing and disciplined action. In life, patience shows up when you resist reacting to every minor annoyance, or when you focus on long-term goals instead of instant gratification. The same principle applies in trading. Entering trades impulsively or exiting too early can quietly sabotage months of careful analysis and preparation. Every decision you make in the market mirrors a lesson from your daily life: the calm, measured response to challenges, the ability to sit with uncertainty, and the discipline to follow through on what you know works. Take, for instance, a time when family obligations, work stress, and personal goals all collide. You might feel pulled in every direction, frustrated that you can't do everything perfectly at once. In trading, this pressure manifests as an urge to overtrade, chase setups, or double down on a losing position. The emotional patterns are identical. Your mind is wired to seek relief from discomfort, whether it's in life or the markets. Recognizing this is the first step. When you see the connection, you can train yourself to pause and reset. A moment of breathing, a quick check of your plan, or a reminder of your long-term objectives can turn reactive behavior into deliberate action. Over time, these small interventions compound, creating a rhythm where patience becomes automatic rather than forced. Another critical layer is understanding that mistakes are lessons than failures. In life, you've likely experienced setbacks, a missed opportunity, a conflict, or an unmet goal. Each one teaches something vital if you pay attention. The same holds true for trading. Sticking to your stop loss or sitting through an unprofitable trade isn't about suffering, it's about gathering data, refining judgment, and cultivating confidence in your process. When patience is rooted in understanding rather than frustration, even losses become productive moments. They become feedback loops that shape your approach, reinforce discipline, and strengthen your emotional resilience. Now, consider how you handle time itself. Life is full of waiting: waiting for bills to clear, waiting for a project to finish, waiting for personal growth to manifest. Trading is no different. Charts move at their own pace, setups emerge slowly, and the market doesn't bend to your schedule. Here, patience intersects with strategic observation. The most successful traders aren't those who act quickly, they are the ones who act correctly, consistently, and at the right moments. Cultivating patience in life strengthens this ability. Your attention becomes sharper, your judgment clearer, and your emotional responses measured. You begin to see patterns before they happen, spotting setups without forcing them, and letting the market reveal opportunities on its own timetable. Lastly, integrating patience into your daily routine reinforces this mental framework. Simple habits like journaling your decisions, taking brief reflective pauses, or setting structured goals train the mind to value timing over impulsivity. Just as in life, these habits aren't glamorous or dramatic, but they are powerful. Over weeks and months, they create a foundation for resilience, consistency, and clarity. When you bring this level of self-awareness and discipline into your trading, every action, whether a trade, a risk management decision, or a portfolio adjustment, is grounded in intention. And the ultimate lesson becomes clear: the patient, thoughtful trader is a reflection of the patient, thoughtful life they lead. Mastering one inevitably strengthens the other, creating a cycle where both life and trading thrive together.